Alright, what's going on, guys? I want to go over today's two trades and the entire narrative of why I ended up going short after I took a loss, which was a long position this morning. So this was the daily chart before the actual day started. So you can see this is Wednesday. I'm in replay mode right now. Same thing here on NQ. I did take my trade, both trades on NQ. So what do we have? We have this daily pool of buy side liquidity up here. Let me actually remove that and turn this back off. But I'll show you those drawings in a second. We have this buy side liquidity pool up here. And what immediately I was looking at was this fair value gap up here on the daily time frame with ES. So what's it called? You can see that this is a very strong drawn liquidity. We also have this order block. These three up close candles are your order block, and this is your daily breaker here as well. So what was I looking at on NQ? We still had this volume imbalance, and this is also a new day opening gap. So we will bring in our drawings now. And if you don't pay attention to these black lines and I zoom in, you can see that the body is closing pretty much on the mean threshold of this volume imbalance. And which really isn't good if you're looking to be bullish, right? You want to have a strong close over. So immediately going into the day, I was bullish until either NQ hit its weekly fair value gap low or ES hit its daily fair value gap high. And this is where I kind of got sucked into the lower time frame. We had news at 8:30. Let me play price a little bit. Okay, here we go. We had news at 8:30 and 9:45. And you can see that the 8:30 wick didn't really have any manipulation either side, right? All we kind of did was just rebalance some of these inefficiencies down here. And this is the reaction. This is where I actually should have changed my bias, but this is where I went long. So at 9:30 we had our, of course, New York Open, and we had a little bit of a Judah swing higher. And this is where ES actually hit its daily fair value gap, and you can see right here, this is right at 9:45. We had SMT at the highs, and that's where ES kind of just souped the original high of this institutional order flow entry drill, and then we dropped lower. So I was looking at this hourly order block because it was created off of the London session. This series of down close candles here, I had this marked out like that. That's like so, and I was bullish because I wanted to see NQ draw up into the weekly fair value gap, even though ES did. But this is where I was wrong, and I know exactly what I did wrong. So we have our hourly order block down here that's being supported, or that's being used to support at 8:30. You can see price is kind of just chopping around, and this should have been my sign not to go long or been looking for longs. One, the weekly profile with a Thursday classic reversal profile. And so that was sign number one. Sign number two is if you look on the 15-minute time frame, you can see there's no fair value gaps on this move up. So that should be fishy. That shows that there's no real sponsorship behind the move, and you can see there's not a lot of big body candles as well. So that's all also a telling sign. And I've recently been using the opening range gaps, which is just you get these by turning on regular trading hours down here. And so when you're bullish, you want to see an open, right? You want to see the opening range drop lower first with the 9:30 Judah swing, and then kind of have this pattern to go higher. We had the opposite, right? We have our opening range. We'll get rid of this blue box. That's that volume imbalance, but we'll get rid of that. We had the opening range gap up, and we had a failure to go higher, as well as the Thursday reversal profile, which is pretty much the key of knowing why we should have had a massive sell today. And also keep in mind that we had a key area of liquidity that got ran, right? Which was what? We have this volume imbalance. If you look at the 4 hour, what do we have up here? We have a bunch of, let's go to electronic, excuse me. What do we have up here? We have this two down close candles, or up close candles, and more importantly, we have that SMT with the daily gaps. So this is where the liquidity was ran on ES, and this is where I ended up taking my long position. I looked on the 5 minute at the beginning, wanted to see some closures above these last up close candles. We got that. Never got the fair value gap that I was looking for. And on the 1 minute, we actually got a pretty nice setup. We got a sweep of all these internal lows down here, protecting our 830, and then we closed above these last two down close candles. And this was that hourly order block, this black line that we're tapping. So that's why I was convinced that we should go higher. But like I said, with the framework that I just gave you, I should have never been looking for longs. If I missed this long setup, then that's okay. But it really has to do with the Thursday reversal profile and the lack of displacement on the higher time frame. So that's why you can't really get stuck in the 1 minute time frame. But I'm not mad about this trade whatsoever. It is something that I would take. And this trade would have worked if I was on side with higher time frame order flow. But the long position looked like this. I longed off of this. Stop loss was at 20 or 51 50. I was using the 50% of this wick, wherever that is. So yeah, 51.50, one tick below. I only got in half size. I was in with 5 MNQs, and I was going to target these highs. You could see 1.6R trade. But this is a real turtle soup up here. ICT explained that today in his live stream. But the opening range paired with the weekly profile and the higher time frame bearish for value gap getting smacked on ES, and then this immediate reaction that we had. And you can see once again, even on ES, not a lot of institutional sponsorship up to this level. And it is also the day before Jackson Hole. So which day are we going to get a massive expansion, right? And it doesn't even necessarily have to be a huge expansion, but you can see today is most likely not going to be the day for another move to the upside. But so this was my first trade, lost there, and I remained patient. I did not chase price, and once I saw this displacement through this area, I will now get rid of the opening range, this order block, and the opening range, or opening range gap. But once I saw this displacement through this area, I saw this low get broken. Price failed to get up here. We just immediately rebalanced during this wick, and then continued lower. And so what I was looking at now was I was on the 15-minute time frame, and what I saw was that this low created at 2 a.m. was taken, and we shouldn't even have come down here if we were going to go higher, right? So that's how I knew that price was not done delivering to sell side liquidity. What do we have? We have Wednesday's Asia session low, which is a key area in price. And also, if you use this swing low to this swing high, you can see that this pool of liquidity, Asia, was in a discount right below midnight. And you can see that's where price is most likely going to be drawing to. And of course, these other pools of liquidity down here. And this, in this case, is our original consolidation low. So that you could have held a runner for. But I did take full position off at this low. So we'll make our line red. This is our Asia low. And so the setup that I was looking for was just a classic continuation. Once I saw this huge displacement lower, and we already have the framework, we have our Thursday reversal profile already in motion. You can see that this area is now fully balanced because we have this up close candle. We close below here, 10 a.m., immediately rebalance inside of this wick, failed to even touch the body or the open, and then displace a lower, creating what? A fair value gap. So now this is where I'm expecting price to hold from. And I also threw in some standard deviations into the mix. I used the high, this high to this low. That is the highest. This is the manipulation leg before the distribution lower. So what do we expect in the 2, the 2.5? We expect a retracement or reversal. And in this case, I was expecting a retracement to where? Inside of this 5-minute fair value gap. And so this is where I kind of just averaged in. I also understood that this 830 low is a key low. And if you look on the higher time frame, it is also a breaker. But I did not want to see this really get tapped because I wanted to see price stay in a rush to deliver lower. And we also expect the 1 to 1.5 area in price to have a reaccumulation before a distribution lower. So if you're looking at this as a power of 3 as well, this is your accumulation all in here. Let me use my brush. This is your accumulation. This is also your 930 Judas swing up here. And then this is where your smart money reversal occurs. Up here, smart money selling all of these, all inside of this area. And this is where you start to get your distribution lower, right? So all I did was wait for price to come back into my 5-minute FEG. I used the very low of the silver bullet zone, which was right here. So my first fill was at 26.50, which you can see got filled there, and the rest of the contracts I had just a little bit higher, just because I didn't even really want price to hit this consummate encroachment of the fair value gap, but you can see it did, literally to the penny, and then rejects lower. And as soon as I saw this, I knew I was on side. I also already had my first take profit hit. The price was moving very volatilely. I could have taken profits a little bit better, but I wasn't expecting the large range that we did get. But from my fill to this low was already over like 40 points. I only did get in with 7 contracts, just because the last 3 I did save for this 830 low just in case it did want to get up there. But like I said, I didn't really want it to. I had a 20-point stop on this trade. I just used the high of the 5-minute fair value gap as my stop, and you can see the TP from my entry was almost 40 or pretty much 45 points. So already at over a 2-hour trade, and my final take profit on my last 3 contracts was the Asia session low, and I was completely fine. From our entry to our full take profit is a 3-hour trade, and as soon as my first take profit got hit, I moved my stop to break even. Never got stopped to break even. Full take profit hit there. But if we do zoom out, you can see that price is going to continue to draw lower. Slight retracement up into this up close candle over here. One last time before getting that move lower. And what do we have? We have sell side liquidity in here and resting at this low. And our ultimate objective is this low from Tuesday, which gets knifed right through, and you can see what exactly happens, right? Price just continues to knife. You could say in hindsight, I paper handed this whatsoever. I'm completely fine with catching my piece of the pie. Wasn't expecting this much low resistance liquidity, but it can happen on a Thursday with all the framework that we already had lined out. But this is exactly why you just have to stay diligent and just know when you're off sides with smart money. This was just a very good reminder for myself to just, stay in control of yourself. And for anybody listening, don't let one loss or one bad day get to you, right? In this case, this was just a small loss before a very nice winner. Very green on the day today, but I just wanted to make this video for you guys, breaking down a little bit of the psychology and a lot of the framework that I was able to take this trade with. But I hope you guys enjoyed, and I'll see you guys in the next one.